Good day. My name's Warren Davison, and I'll be taking you through the PSG Wealth Offshore Solutions for the month of October. What I like to start off with is just a market background, just to summarize what happened over the month as it relates to the global markets and feeds through into the solutions. After a weak start, stocks regained momentum throughout October, with many equity indices making new highs during the course of the month. US stocks were supported by a strong start in Q3 earnings season, with more than 80% of companies beating earnings expectations, which helped to drive the S&P 500 to a new peak. Chinese indices also rebounded, in part thanks to the progress in the beleaguered property sector. Fixed income markets were much more bumpier. The combination of persistent bottlenecks in the global supply chain and booming energy prices drove concerns around prolonged inflationary pressures, leading markets to price in a faster pace of tightening from central banks across the world. The 10-year US Treasury yield hit a high of 1.7% over the course of the month, but much larger increases in shorter dated yields caused interest rates curve to flatten in several regions. Turning to the PSG Wealth global portfolios. Looking at a month-on-month growth in assets under management for the offshore solutions, we saw a rebound surpassing the previous highs seen in August. October saw strong markets, which helped the overall solutions. Advisor flows also remained strong over the month, with roughly $27 million in net inflows occurring over that month. The total AUM for the $4 funds currently sits at $2.57 billion. The peer group rankings have encountered some headwinds within the lower risk funds. However, longer-term numbers continued to produce favorable results. 3 of our 6 funds produced first quartile performance over their recommended holding period. Turning to the individual fund performance. The Global Preserver had a bad month, underperforming the peers by 44 basis points in the dollar class and 112 basis points in the pound class. The 3-year holding period numbers remain under pressure relative to the peers. However, when looking at our longer-term performance, we can see that is still favorable on a since inception basis. The strongest performer within the fund of fund was Schroders Global Multi-Asset Income, whilst Fidelity Global Multi-Asset Income was the laggard. For the PSG Wealth Risk Radar, 91 Global Multi-Asset Income USD remains on the risk radar for this month. The Global Moderate saw a positive absolute month, generating 2.3%, however trailed the benchmark by 22 basis points. The fund has been performing better over the shorter term and comfortably sits in the second quartile over majority of the periods. The strongest performer within the fund of fund was Ned Group Core Global, whilst 91 Strategic Managed was the laggard. For the PSG Wealth Risk Radar, 91 Strategic Managed remains on the risk radar for the quantitative side for this month. The Global Flexible saw a positive month for both the USD and GBP class. The USD outperformed the sector by 2 basis points, whilst the GBP class unfortunately lagged by 46 basis points. The fund remains well positioned, ranking first quartile over all of the periods illustrated below. The strongest performer within the fund of fund was Royal London Sustainable World Trust, whilst 91 Global Macro Allocation was the laggard this month. Looking again at the PSG Wealth Risk Radar, MFS Meridian Prudent Capital appeared on the quantitative radar this month. Lastly, looking at the Global Creator. The Global Creator saw a strong positive performance, however did lag the peer group by 37 basis points. The fund remains well positioned, ranking first quartile over all of the illustrated periods. The strongest performer within the fund of fund was Vulcan Value Equity, whilst Fundsmith Equity was in fact the laggard over the month. Turning to the PSG Wealth Risk Radar, on the quantitative radar this month we had Threadneedle Global Select and Net Group Global Equity appear on the radar this month. Overall, and focusing on our three-pillar approach of consistent above-average returns at below-average risk whilst maintaining a competitive fee, we can see that the PSG multi-management team is achieving these pillars. The Global Moderate has encountered some headwinds over the shorter-term period. However, the changes which were implemented during April 2020 have in fact been beneficial for the portfolio, and all of the remaining portfolios are doing well. Should there be any questions, please feel free to reach out and we'll happily address them.